Hello and welcome to my screencast. Today I will explain petty cash. Petty cash is an accessible store of money kept by an organisation for expenditure on small items. Petty cash is used when a business purchases items such as office supplies, postage costs and minor transport fares. Petty cash is used as it would be unrealistic to pay cheque as it is such a small cost. The establishing and operating of petty cash happens in 3 steps: establishing the fund, making payments and replenishing the fund. To establish the fund, a custodian is elected. The custodian is responsible for ensuring that the fund is physically secured or attended to at all times. They also have the task of replenishing the fund. To create the petty cash fund, a general journal is recorded. Let's say a business created a petty cash fund of $100 on June the 1st. They would debit petty cash $100, in turn crediting cash $100 to account for the transfer of funds. Assets are increased, then decreased to balance the entry. At the end of the month, all the receipts are collected to account for expenses. Let's say that our business spends $30 on postage, $10 on supplies, and $5 on transport costs. We then add these expenses and subtract them from our beginning balance to determine our replenishment amount. However, this amount may not always be equal if a mistake has been made in accounting records. Let's say we added our expenses to equal $47. We now have $2 unaccounted for. Cash over, in short, is the account created to record this amount. This account can have both a debit and credit balance. In this instance, it's debit. We then determine the amount to replenish the petty cash fund by adding up our new amount of expenses, $47, and taking that away from our beginning balance. Okay, thank you for watching my petty cash fund screencast. I hope you enjoyed it.